Friends, how are you? Igor Pechkovsky is here, your trusted real estate advisor on Seattle, Bellevue, Eastside real estate markets. Today, we're going to break down in a very simple matter of what actually is going on with the market. There was so much information coming at us from all different places. Stock market portfolios over the last months had a really crazy roller coaster. Stocks are up, down, sideways. Iranian war influence on interest rates. It's been a lot to take in over the course of the last 30 days. It's been really confusing. But let's look into numbers, into our local markets. Let's try to figure things out and just understand where we are today and where we might be in the next couple of weeks to a month. So let's take a look. We'll do only Bellevue and Seattle today. We'll make it simple. Let's start with the east side and let's go. Demand and supply. That is it. For corporations, for real estate market, for anything else. Let's look into supply. We are at 2.1 months of inventory on the east side. It means if there are no new homes to enter the market, at the speed of sales they go pending today, it will take 2.1 months for all of the inventory to sell off, right? 2.1 months is a relatively balanced market. It's not a buyer's market just yet, but it's not a seller's market either. It's just balanced. That number, as you see on the graph, grew from 1.1 months of last year. So there is a 60% increase in inventory. It's a significant amount. The gray line over there, as you see, that are amount of deals that went pending. So they actually declined slightly from the last year. So the buyer's demand was relatively the same over the last couple of years, but they definitely have more homes to choose from. So let's look into something. Next slide, how are these homes on the east side are selling? Well, based on last months of March, right? Because we're always trailing numbers from the previous months. In March, we had 32% of homes still sell over asking. If you're the seller, you want to be in that 32%. That's a significant amount, which just says and proves, and again, this is on the median for the east side, that the right home, if it's priced well, if it smells great, if it's well presented and looking fantastic, there is a 32% chance that it would sell over asking. When we're going to get numbers for April, which is not over yet, we'll see what those numbers look like, but as of March, that market is doing really, really well. 22% of homes, they sell at asking or slightly below, and 21% of homes, they were either canceled or released or had a price adjustment of over 5%. So, market moves just fine, but at the same time, it's a lot more balanced. There is more inventory on the market, 100%. And let's look how our median price responded to that. If we look at median prices, they're down 9% year over year since the last month. The question that comes to mind is pretty logically, like, is there more to give? Is the bottom? And no one really would tell you the good answer of where a market goes from here. You see the news just as I do. But at the same time, I want to point out that $1,550,000 of a median, that didn't happen overnight. That price adjustment took place in the second half of 2025. So if you go back through those videos, like we've been at that median number of 155 for like 3 to 4 months now. Like we reached that bottom towards the end of last year. So that 9% correction just happened over the course of that 6 months of 2025. That market was brutal. So I'd probably make a case that us staying here, obviously if we compare to the peak of the same time last year, it's minus 9%. That's as clear as it gets. But us being at this spot would suggest to me that market has stabilized, at least at this point. The question is, where would it go from here? Well, the stock portfolios are back to being all-time high. Is there going to be more roller coaster during this Iranian war? Are we going to get a ceasefire? Are we close to finishing it? Or are we going to have more war? That's not a question I'm here to answer. But stock market dictates bond market dictates interest rates. So if stocks are back and interest rates are right around 6 or got a little bit better, and people, at least in our markets, feel like they got their money back, at least in the stock market, that will prompt for real estate to stay the same or slightly improve, and that inventory would slightly start dropping or stay the same, shouldn't increase. So I feel like we're reaching a good point to be making decisions, but we're going to know more based on, April numbers and where we go from here. Let's look into Seattle. So Seattle market, it's been very interesting to watch over the years as long as I've been making this video, but we still have less inventory, 1.6 months of inventory than we had in Seattle. Obviously, it's about, a 60% improvement. 60% more inventory than the same time last year. We improved from 1.2 to 1.6. So it is a jump. It is a more balanced market. At the same time, if we look at that demand and that gray line, that demand still is the same, like from 2023, 24, 25, and 26. Obviously, it dropped since 21 and 22 as interest rates continued to climb, and they pretty much doubled during these times. But demand is there. There are more listings to choose from. The market, when we look at a median price, same thing. It adjusted by 6%, and it mostly adjusted during the same period of time of going last year. So we already had a correction, right? When buyers talk about having more deals to choose from, when buyers talk about having more leverage to negotiate, and when buyers talk about crisis and corrections and all of it, 9% in Bellevue and 6% in Seattle, that is not a bad correction. The only question is this the bottom? I would always go back to my default advice. If you can find a home that you can afford and you enjoy and you like, go buy that home, right? You're not going to be able to predict the market or time the market. Did you know necessarily that Iranian war would start months and a half ago? Maybe you did know. Most people probably didn't see it coming, right? So these things are hard to predict. If that war ends tomorrow, this might be the bottom, because right before, when we were in January and February, market was really good. Market was stable. Interest rates were right around 5.75%, depending on what lender you ask. I've seen even lower numbers than that, like 5.35, 5.4. And that inventory was selling just fine. Today, prices had corrected. Market is somehow stable. And if you look at over asking figures, the same thing. In March, 37% sold over asking, 18% sold right at the asking price, and 19 had price adjustments. So that is that. Let's summarize it. So my bottom line summary would be, if we look at markets and if we talk about buyers and sellers, so we clearly see that the demand didn't go anywhere. The demand is there. So the market demand didn't decline, but it became a lot more selective. Because for the sellers and the amount of listings out there, the amount of listings had increased, the amount of buyers stayed the same. So they clearly have more options, and listings are now competing for the same pool of buyers effectively. So execution of the listing and how it presented and how it smells and looks is the most critical point that you could address today if you're the seller. There are very little pricing arrow that you could make listing the property. That price has to be on point. These buyers have to walk into the home, fall in love, write you an offer, and move forward, right? Because if that doesn't happen, price adjustment is going to be painful and they're going to be expensive down the line. So the market isn't, as I said, it isn't slow, it's selective, and strategic pricing really wins. So the strategy about listing the home and how it all got to be presented, it's as crucial as it could be today. So if you're the seller, hire the professionals. If you are the buyer, make no mistake, it's a great thing that you have more leverage, you have more listings to choose from. Isn't that what we really wanted for years to come? But the right homes, they still sell. So if there is the property you like, make an offer. Let's negotiate. Let's ask for the price that is our desired price. let's make it happen. Because how long this is going to last? I think it's a question of time. The fundamentals haven't changed. We still don't have the land to build. We're still not going to have a lot of inventory moving forward. It's a matter of really interest rates. When conditions on market improve, when market stabilizes, I believe that the demand will, in the end of the day, outweigh the supply, because we're simply not building enough homes. And moving forward in the future, when interest rates go to 5% or 4.75, when that happens, I don't know, a year, 2 years from now, we're gonna see a more hotter market as we've seen before. But today it feels like a great opportunity to lock the proper home. Reach out. Thank you so much. See you next month.